On salary sacrifice, and we have our usual disclaimer which we have to read out, which is basically the following presentation is produced for general guidance only, and professional advice should always be sought before any transaction is undertaken. Individual circumstances can vary, and therefore no responsibility can be accepted by Harts Limited or any of their affiliates for any action taken or any decision made to refrain from action by attendees of this presentation. So you've got other loads of Harts online resources as well. As always, you can follow us on LinkedIn. We have stuff going out there Monday to Friday. Well worth keeping tabs on because there's some interesting information going on there. We're also on YouTube, so subscribe to our YouTube channel because this is where this recording is going, and you'll be able to catch up on anything that you might have missed later on. This will be up on our YouTube channel later on today, but there's also about 4 years worth of videos, webinars, interviews, and so on, all up on YouTube. So well worth having a look at seeing what's there. And we're also on Spotify because we've done some interviews with some business owners, how they've done it, made it, and so on, and the challenges that they face. And it can also be very similar to the challenges that you face as well. So have a look on Spotify for us there. The next event we have is our business club on the 18th of June at the Holland Hall Hotel in Bollington. It's a great event, and we have lunch, networking, and speaker. And we're delighted to say that we've got Chris Woodruff, of the Managing Director of Manchester Airport, who's actually going to be speaking at this event. So I'm sure you've all got some massive questions regarding Manchester Airport, because it does bring out some the good bits and the bad bits for a lot of people when they're travelling as well. So it's your opportunity to hear from him what the development of Manchester Airport is going to be about, and what anything else you want to ask him as well. So well worth coming along to that. Book on via our events page. There are still places available, so please feel free to join us next week for that event. Just thought of a quick rundown of the services that we offer. As you can see, there's plenty there, because what we don't like is people coming up to us saying, "Oh, I didn't know you did that." Well, this is everything that we do and more, so it's well worth having a look at this. We do a lot of business advisory work, strategic planning work, business acquisitions and disposals. We're working on one at the moment, and it's as well as all the usual stuff you'd expect a firm of accountants to actually do. And so that's basically what we're about at the moment. So have a look at that. If you want to contact us on that in relation to any of those services, then please feel free. Because a quick update, we have Making Tax Digital coming in April 2026. Are you ready for this? Because at the end of the day, this is going to affect you if your turnover from self-employment or property, that's income and not profit, is above £50,000. Then you are affected by Making Tax Digital. So get in touch and we'll be able to help you with that. There are enormous changes coming at Companies House, and a lot of you will be receiving letters from Companies House explaining what those changes are and having to verify your identity. Be careful, this is not a scam, but if you've got a problem, get in touch with us as well. And as no doubt you've seen, some of you may be affected by the winter fuel allowance, massive U-turn by the government. So if your earnings are below 35,000 or on 35,000 and below, then you're going to be entitled to the winter fuel allowance this winter. So that's a little bit of a bonus for some of us. So what we're going to do next is I'm going to hand over to Craig Cooke from Britannia Car Leasing, who's going to talk to us about the salary sacrifice scheme for cars and how that works. Now, just bear with me 1 second while I just pull up his presentation. Here we go. So we'll start off with the benefit for employees. Okay, so you should be able to see that screen hopefully. And over to you, Ben.
Yeah, good morning, everyone. Thank you for the introduction, Steve. I'm here today just obviously to run through the salary sacrifice car scheme. We as a business started to get into salary sacrifice probably in the last 12 months. It's a product that works very well alongside business contract hire. So I'm just going to run through this presentation. And obviously we can sort of, any questions or queries we've got at the end, and obviously I will give you some ideas of how it works. It's actually pretty straightforward as a product. So if you can just go on to the next page for me, please, Stephen. Okay, so salary sacrifice, and as you can see here, it's an opportunity to use some of your salary before tax and national insurance is deducted to pay for a brand new vehicle. It also means that you can save money by reducing your income tax and national insurance. So there are savings to be had from the employee's side, but also the employer as well. So we'll get around to that in a little while. Again, if you can just move on to the next page, please. So as you can see, these are the products and services that you can get with salary sacrifice. So obviously you can get a brand new vehicle. We can include insurance, maintenance, roadside assistance, your road fund license is included. Salary sacrifice, really, the main benefit is if you were to take a fully electric vehicle. We as a business can do plug-in hybrids, but the savings aren't as high as if you were to do it with the fully electric, and that's just down to the CO2 emissions, basically. Okay. We also have insurance products for early termination. Again, we can get up to that a little bit later. You can also look at buying the vehicle at the end, and they're just basically some of the benefits that you can see that you can get by using salary sacrifice. Okay, so we can just go on to the next page, please. Okay, why go electric? Basically, low benefit in kind is really one of the main things, because the CO2 emissions are zero. Benefit in kind is only 2% at the moment. I know that is increasing over the next year or two, but again, it's still very low compared to plug-in hybrid and also sort of, petrol vehicles as well. Okay, and obviously, certainly if you're down south, using the ULEZ compliancy as well, and obviously those congestion charges again is a good benefit for a lot of people as well. Okay, next one, please. So how it works, again, it's really straightforward. It's basically a business contract hire. This is the easiest way to describe it. So if you've ever leased a vehicle before, you'll know how it works. So there's two parts of salary sacrifice. The first one basically is business contract hire, okay? And that is what the business will pay the finance company. So that just could be, say, £500 a month. That would be the contract between, like I say, your business and the finance company, okay? So how we get there is you come on to us, you give us your sort of requirements with regards to a vehicle, or you might have even seen a particular offer on the website. So we will then run through the details with you, what annual mileage you need, what maintenance, the term of the contract, etc. We will then generate that quotation. What happens is we then put that into the salary sacrifice website, and it goes off your salary. Now, we can only take your basic annual salary. We can't take any dividends or bonuses, etc. A couple of other things, very basic information, is your date of birth and also your postcode, and that is for the insurance side of things. If you're happy with all of that, basically we order the vehicle for you. We'll deliver the vehicle for you, and at that point, our company, the salary sacrifice company, will get in contact with your HR, payroll, whatever it may be, just to advise you of how the deductions need to be done. And obviously, once you've taken delivery of the vehicle, that's when the salary deductions begin. Okay. There's just some frequently asked questions, and again we can kind of come back to that at any time if you want to. The information we have a lot of information on our website, and again, so if you want to go and have a look on there, I've also got PDFs that we can send out if that helps, for employees and employers as well. So there's a lot of information that you can get if you want to sort of if you want to ask any further questions or queries. Okay. One of the things I'd say on the right hand side is, can I withdraw from the scheme and revert to my original salary at the time? Well, termination fees will apply should you wish to terminate the lease before the end of the agreement. But in certain circumstances, sort of life events, etc., then you may be able to withdraw from the scheme without being liable for a termination fee. But that would basically be, you'd have to have a look at that sort of case by case. Okay. I think if we move on to the next one, Stephen, is the next one for the employer now?
Yeah.
And again, it's very similar to sort of what you've seen from the employees. But the good thing is, benefits basically for the business, we find, are businesses that want to reward senior managers, long-termers, so to speak, people that they haven't got a worry about that are going to up and leave in the next sort of 6 to 12 months. A lot of the business that we do salary sacrifice for, a lot of it are owners, MDs, directors, head of HR, anything like that. And again, what a lot of the companies do are rolling it out as a benefit to the employee, obviously, like I say, as a benefit, as something positive for them to keep them at the company and make sure that they feel wanted and the company are actually happy to invest in them as well. So that's a good thing to roll out for your employees as well. So if we can just move on to the...
So effectively then, the brass tacks of it is that the employee has a salary of maybe 40,000 a year.
Yeah.
He can give up maybe 5,000 a year for purchase of a car through salary sacrifice. So he's effectively only taxed on 35,000 a year.
Yes.
So effectively, he's getting his car out of gross salary rather than net salary.
Yep.
So he then has a savings made on national insurance, which is the main saving there, and so on. So that's where the benefit comes for the employee. So let's moving on to the employer. Back to you, Ben.
Yeah, so we've kind of covered this first one. We know what that basically is.
Yeah.
So if we can move on to the next one. Okay, so look, benefits for your business: age recruitment, employee satisfaction, motivation, and also, like we say, retention as well. I think that's a good thing for for your businesses. Savings for the company, again, you will save on the VAT, because the thing is as well with it, it's a business contract hire. So as a business contract hire, you can claim 50% of the rentals back anyway. So there's one saving, but obviously then there are also savings from the salary sacrifice side of things as well, which obviously is a benefit to you as a business. It's suitable for all employees. There's no, you can basically, anyone. I think what I've come to the realization is, I would say, depending on what type of vehicle you're looking at, I would say anyone sort of below £30,000 probably won't be eligible, because what happens is, depending on what vehicle they go for, it almost takes them below what's the word I'm looking for, the salary, basically, basic salary. The system won't actually allow it. So just be mindful of that. I think if your employees are on sort of £30,000 or more, then I think that will probably work for them. Okay. And
is that because of the minimum wage?
Yes.
Rules?
Yes. Basically, what will happen is it can take you under the minimum wage, and the system won't actually physically allow you to quote that. So again, just bear that in mind if you're thinking of rolling it out to particular employees. I'd say 30 to 35,000 and above, then you shouldn't have any problems with that. Okay. But one of the questions that we do get asked, and again, you can see in the bottom right hand side there, are vehicles transferable? Well, the answer to the question is yes. If you do have a member of staff that leaves, there are a couple of things that you can do. If you're happy to, you can basically offer that vehicle to another employee, and they just take up the car's already sat in the car park. If they're happy to do so, you can basically just switch that to another employee. Okay. If they want to, this is a tricky one, but it can be done. They can actually take the vehicle with them to their new role, but then it has to be agreed with the new employer that they can do so. And again, that is an option, just to put it out there, but that might get a little bit tricky on how you do that. You can see in the top right hand corner about early termination protection, and I think this is important to cover on as well. If you don't take that insurance product and your member of staff leaves, you as the business are responsible for that vehicle, because it is essentially a business contract hire. Okay, so you as a business sort of own that vehicle. If you hand that vehicle back, the majority of the time you will have to pay the remaining 50% of outstanding rentals, and that's just because it's business contract hire. Okay, we do offer an early termination insurance that you can add on to that, and that basically does exactly what it says. It's very straightforward. You pay, weirdly, it's between 10 and 12% of the monthly rental. That's kind of the cost to you as a business that will insure, that insurance will cost. Okay, but what that does do is it negates any risk, is that if somebody does leave the business, you've got that insurance and you can hand the vehicle back without having to pay any fees. So again, there's a good product there that you can bolt onto the side of that. I mean, if you're doing it as a director and you know that you're going to be there for the next 3 to 5 years, 10 years, you don't necessarily need to take it, but you can pick and choose which employees you have that early termination product for. So again, it's not compulsory. It's down to you as a business of who you want to put that in for. But again, it's just a good fallback plan if you do want to protect the business against any risk on that side of things. Okay. We'll just move on to the next page, Stephen. So benefit for your employees. And again, we've kind of gone through a little bit of this. They get a brand new vehicle. We could include servicing and maintenance, so the vehicle will be fully looked after. If you take the maintenance side of things, you will also get tyre replacement as well. Roadside assistance is included, road fund license. You can also get a charger, and again, that is part of the actual package that we offer as part of the actual salary sacrifice, is that you can actually add a charging device as part of the salary sacrifice, so you'll pay that on a monthly basis. Again, we've gone through the early termination insurance, so we know what that is about. Again, the tax and national insurance savings, because it's taken from the gross annual salary, it gets deducted down. I have got a couple of quotations, Stephen, that if I can send to you, yep, we can put on, just so you can see yep, and I think it'll help the guys as well to sort of see the actual layout of how it does that. There's no employee credit checks, because obviously it's up against the business. So those basically are some of the benefits for your employees. Okay, so if we can just move on again to the next one. Again, we've gone through this in the previous thing. This is obviously just kind of replicating what we've done. It's about coming to us with your requirements, your annual mileage and term, and we kind of set all that up for you. And then obviously once that's delivered, then obviously the salary sacrifice will then start. Okay, I think, Stephen, is that the last one? Okay, yeah, fine. So if I just bear with me one moment, I'm just going to see how I can get these across to you. In fact, Stephen, can I just quickly nip out for 2 seconds just so I can send this email? Is that okay? Yeah,
no problem. Yeah, that's fine. What we'll do as well is, while you're not there, has anybody got any questions they want to ask on this? And feel free to do so. You can unmute yourself or stick something in the chat box. But basically, it's a fabulous way of getting a car, which costs you will cost you less than you would do if you're having to purchase it yourself. As I say, the main benefits relate to electric vehicles, because the benefit in kind is so much lower. You're typically talking 3% of the original list price of the car. So the benefit in kind, say on a £50,000 car, 3% is 1,500 quid. Even as a higher rate taxpayer, you pay 40% of that, so that's £600 a year, and the company pays for everything else. So it'll cost you 600 quid a year in tax, and for a basic rate taxpayer, that's only 300 quid a year. So it's a very cheap way of actually doing it, to be able to get a brand new electric vehicle. So those are the sorts of savings that can be made in relation to it. You can do it for non-electric vehicles as well. but again, the savings aren't as great because you've got the big benefit in kind charge on yourself. One thing I will mention is, and Ben's going to be aware of this as well, there has been talk in the press about Rachel from accounts having a look at salary sacrifice schemes, not just for cars, but for everything else as well. So we're waiting to see what will happen with that, but at the moment it's still there and still available. Ben, I don't know if you've heard any more than we have in relation to the Chancellor having a look at salary sacrifice.
I haven't, no, I haven't heard anything else other than what we've already heard, I don't think, at the moment.
Yeah, we're hoping that that's not going to happen, but she wants to cover it all off and get rid of it altogether, from what I understand. Because not only does it apply to cars, it also applies to pensions, which we're going to hear about shortly, but it also applies to company bicycles as well. So you have your bike to work scheme as well, which can also be done through salary sacrifice. And there's probably been a little bit of abuse by people buying bikes for £5,000 and using it as a salary sacrifice. And are they ever really used for cycling to work? Unlikely. So it's probably coming down on those sorts of abusive uses of the salary sacrifice scheme. So that's where we are. One other thing I will just share with you on this as well. So I've got a quote here, which I will share with you.
Yeah, so there should be two.
I've got two. Yeah, can you see that quote?
Yes.
Good.
So I just wanted to run through and give the guys an idea of what the quote will look like, what I've based this on. So if you can get, if we stick with the second one that says BYD all.
Bear with me. Yeah. There we go.
Right. So as I was previously saying, as you can see on this quotation, I've just based this off an offer on our website. It's a current offer on a BYD seal. I've based it on, with salary sacrifice, you have to base what we call one payment down. With business contract hire, sometimes you see advertisements where you can put like £5,000 down, which will reduce your monthly payment. You can't do that with salary sacrifice. It's got to be based on one initial payment. And the reason, obviously, for that is it comes out of your wages. So if you were trying to do, a big initial payment, it would come out of the employee's wages. So it's always based on a single payment down. Okay, I've based this on, as you can see in the quotations where it says financial details, I've done it on a 3-year lease, and I've based it on average 12,000 miles per annum because, just to put some figures in front of you. This particular quotation is based on, I put a salary of 60,000. Okay, just so you're all aware of what these figures are based on. So this is a BYD seal, fully electric vehicle, based on a 3-year lease, 12,000 miles per annum, based on an annual salary of £60,000. In the middle on the right, and financial details, you can see there's sort of 3 or 4 different prices there. So I was mentioning earlier, we can add a charger. Okay, so that basically is the cost of the charger. I've also added insurance, so that's car insurance. So that means basically you'd be fully insured on the vehicle as well. Underneath that, I've included a maintenance package, so the vehicle is fully maintained. And obviously underneath that, you've also got the cost of the vehicle. So the total amount for salary sacrifice is £896.33. However, as you can see, as you go further down, the employee income tax savings £341, the national insurance is £23, the benefit in kind is £24. So the actual cost to your employee, what will be deducted from their wage, is the 556.16. Okay, so that's the actual cost. So you can see from nearly £900 a month, the actual deduction is 556. So there's quite a big saving to be made there. You could also see on the right-hand side as well, there's the company national insurance saving and also the VAT saving as well. So the business on that particular offer would save £186 as well. Okay, so again, that is a good benefit for you as a business. If you can now just, Stephen, go to the other quotation. Great. So what I've now done, and this is where we feel our product is slightly different than a lot of the other products. You can now see there's no cost for the charger, no cost for the insurance, no cost for the maintenance. They're not compulsory. It's down to you whether you want maintenance, whether you want insurance, whether you want a charger. So all I've done is basically remove all of those. So you can now see it's still the same car, it's still the same term and mileage, but I've just put the cost of the actual vehicle in. You can now see the true cost of that is £377 a month. The company saving comes down a little bit because obviously there's bits of there that you're now not saving on, but you can see the company saves 114. My understanding is a lot of other salary sacrifice companies don't allow you to pick and choose. So you pay for everything and you also don't know what you're paying for. They just give you a particular price. You can see by our quotation, it's split out. So you could come to me and say, okay, Ben, we like that. We don't need the charger and the insurance is far too high. We've got our own insurance. So you can remove and add those particular products to suit, again, the individual employee or however you want to set that up as a business. And I just wanted to put those illustrations in front of you guys so you can kind of see how the savings work, what products you can add, what products you don't need to take, etc. So it's a very sort of bespoke product and you're in control of what you're paying for and how you want to run the salary sacrifice scheme as well. So I just wanted to sort of present those to you just to give you a rough idea of one, what a quotation will look like, and two, the flexibility that you guys have to pick and choose, you know, what products that you want to go for.
Great. Thank you very much indeed for that.
Okay.
What I'm going to do now is Phil on the call? Have you made it on, Phil?
I'm there, yeah.
Marvellous. Have you got your presentation ready?
I've got it open. Do you want to do it on the same basis or I can...
Yeah, I can do that.
I'll ring a bell for the next...
Right, fine, no problem. Just bear with me 1 second. Has anyone in the meantime got any questions for Ben in relation to the salary sacrifice for vehicles? You don't have any questions? We've got nothing in the chat box.
I might have covered everything, Stephen.
I think you probably have. Just bear with me 1 sec.
If anyone does have any questions afterwards, then obviously feel free to give us a call, and I'll be happy to spend 5-10 minutes with anyone on the phone and run through any questions or queries that they've got. That's fine.
Yeah, no problem. Great. Over to you, Phil.
Okay, thanks, Stephen. So this is me, Phil Gammond, Seagreen Pension Consulting. Just a very quick background. I was a financial advisor for 25 years. Before and after that, I was what's called a pension consultant. So I deal with companies and individuals about pensions, although I've got extensive knowledge about financial services generally. So if you could go to the next slide, please. Obviously, I'm going to talk about salary sacrifice. It's sometimes called salary exchange, clearly because that sounds better. To be honest, like Ben, we used to call it salary sacrifice, so that's the word I'll use. But if you hear salary exchange, it's the same thing. So next slide, please. When we talk to employers about pensions generally, this can be the reaction. Pensions are complicated, which they are, and the rules keep changing, which they do. Other pressures on employers that you're clearly well aware of, things like increases in employers' NI and national minimum wage. So if you go to the next slide, please, the way it looks like for employers at the moment is money's just going out the window. So one of the reasons, apart from some of the stuff that Ben covered about benefits to employees and generally for the well-being of the workforce, is savings for the employer. So next slide, please. So I'm going to run through the basics of salary sacrifice in the context of pensions. It's slightly different to what Ben was talking about. Some things to think about and how we run them. We're actually getting a lot of inquiries about this. And there's one that we're in the middle of now. So I'll give you some practical examples of how we're dealing with it. If you go to the next slide, please. So these are the basics. In terms of pensions, clearly not electric vehicles. It's been around for a long time. It goes all the way back to the 1970s. And I actually do remember just about working in the 1970s. So the thing to bear in mind is it is very well established. And about half of employers have looked at salary sacrifice in different contexts. So nothing's new under the sun. It's not going out on a limb to look at salary sacrifice. It's relatively common, and we are getting a lot of inquiries about this. At the moment, we're dealing with employers ranging from 4 to about 700 people. So even a small company, in fact, one person can do it through the company. Clearly, we know why employers need to save money anyway, but because of the recent increases, this is becoming more common. Again, Ben's covered a lot of this, but it's arrangement with your employees where they reduce their earnings in return for a non-cash benefit. So in this case, clearly it's a pension contribution. Same principle, both employer and employee save on national insurance. Now, it's different from the car leasing in this because the income tax and corporation tax position is neutral, because whether the employer pays the individual or makes a pension contribution, it's exempt from corporation tax. And likewise, the individual making a pension contribution would save on their income tax. And if they don't receive the money in the first place, they'll save on their income tax. So it's slightly different from that point of view. The way it works is the employer then makes the total contribution, which means that technically the pension contributions are all employer. Now, generally speaking, that's not an issue. Most workplace pension schemes are on a personal pension basis. If your workplace pension scheme is on an occupational basis, then again, it's not an issue. It's just something to be aware of. Because it's an employer contribution, if the employee left early, they haven't made any contributions and therefore they can't have them back. They remain in the pension scheme, of course, but there is a slight difference there. So if you can go to the next slide, please. So as we said, employees decide whether to sacrifice some of their gross pay and save national insurance. They can use the saving to actually increase take-home pay or increase the pension contribution or a combination of the two. Naturally, the employer also saves national insurance and has the same choices. To be honest, the reason that a lot of employers do this is actually to save and actually mitigate the costs of recent increases. It can benefit both by retaining their own savings. There's two ways of doing it. Normally, it's on what's called an opt-in basis. In other words, you invite employees whether they want to participate and they decide whether they want to. I have dealt with schemes which are an opt-out. In other words, everyone that's eligible is put into it and it's up to them to opt out, which is very similar to the way workplace pension schemes work. As it says there, once an employee is using a salary sacrifice arrangement, then they can opt out anytime. There's no obligation either way. You don't really want that, of course, because of the complications with payroll, but employees, for whatever reason, are able to opt out. I don't think it's particular, because it's been around for a long time, most payroll, certainly all providers, can cope with it. Payrolls need to be able to cope with it because you'll have employees that are not in the pension scheme, you'll have some that are in the scheme, and you'll have some that are in the scheme and use salary sacrifice. So when I talk about a salary sacrifice arrangement, I'm just talking about a tweak to the existing scheme. We're not talking about setting up a new scheme. It's just a tweak. As part of if you're looking at salary sacrifice, we normally look at the provider to make sure they're the right provider for you. But other than that, you can use it, overlay it on your existing scheme, and some will use it and some won't. So can we have the next slide, please? So I thought it'd be useful to give you some numbers. It's important to bear in mind the basis of these, and apologies for the loads and loads of figures, but it's quite useful as an aid memoir to look at later. This is assuming standard workplace pension contribution, which is 5 and 3% of mid-band earnings, and it assumes that the individual wants to increase take-home pay. As I said before, the income tax position is neutral. So if we just take the middle line, somebody on 30,000, if they're in a standard workplace pension scheme, paying 5%, their contribution's about 1,200 gross a year. The employer's is just over 700 gross a year. So if this person decides to sacrifice that 1188 per annum, then the increase in net pay for them is £95. And for the employer, it's about 178. If you look down the list of the final two columns, very broadly speaking, the employer saving is about twice the employee saving on this basis. I use the Royal London Salary Exchange calculator. There are others out there, but I particularly like that one. It's very easy to use to come up with the figures. I've also put together a template. Again, I've done that for the employer we're dealing with at the moment, where you just put all the figures in. There's the salary figures, and it will work out the final two columns. The thing to be aware of is that for anyone earning above the upper earnings limit, it's slightly more complicated because the contribution might stop at £50,270 and it might not. But generally speaking, most people earn below that. So we've got a template. You can just put the figures in and it will run all those savings there. So can we have the next slide, please? So things to think about. And again, Ben's touched on some of these. Contracts of employment terms may need to be changed. And in fact, the company I'm dealing with at the moment does have salary sacrifice in place. And I think that's for computers, and they might have some cycle to work. So they've already got that in place. Just bear in mind, though, it's something that needs to be considered. As I said before, though, it's very common. So it's not going to be rocket science to actually change the terms. Because employees are sacrificing pay, it's very important that notional pay is used in terms of benefits. So rather than the actual gross pay after sacrifice, you use the gross pay before. And that's important because then we can make sure that the correct pension contributions and, of course, very importantly, that life cover are at the correct rate. So if life covers 3 times pay, it's got to be the pay before sacrifice. Again, Ben's covered this. If the sacrifice would take you below national minimum wage, then you can't do it. Anyone at state pension age or over doesn't pay personal national insurance contributions, so the arrangement may not appeal. You can still do it because it benefits the employer, but it just look out for people who are at state pension age. The big issue with all salary sacrifice is for those who have loans and mortgages. You need to take care because their gross pay is now lower. However, particularly for mortgages, many lenders are aware of salary sacrifice. And I mean, I haven't moved for 20 years, but I've dealt with other people's mortgages. And providers are more likely to look at net take-home pay rather than gross pay, because that's clearly more relevant. And in actual fact, salary sacrifice is slightly better using that criteria. Another thing to look at is for anyone who's on maternity, paternity, or long-term sickness. Again, some of the considerations are the same as Ben covered. Again, it should be covered in the contracts of employment. Bearing in mind it's an employer pension contribution, what you want to be sure of is that if you're making a contribution for that particular employee and they have no earnings, you're just making that contribution and not recovering it through reduction in pay. Again, it's something that will be sorted out when looking at it, but it's just something to bear in mind. So if we go down to methods of delivery, this is what we do when we set these up. Bear in mind when I say set them up, it's slightly changing the existing scheme. Firstly, you check with payroll that salary sacrifice can be handled. I said I've not come across one yet that can't. It's just important to obviously to bear that in mind first. Then we look at the employees' details and identify any that can't participate for whatever reason. We'd then use a timetable. So we'd say, okay, we're going to consult on it, do all the calculations, communications, and it's going to come into effect from, say, 1st of September. We're able to do personalised communications for the members. So that will give them their own figures so they can make their mind up. Again, similar to the quotation that Ben showed before. We run group sessions because a lot of the information about this is common to everybody. So we can probably impart 80–90% of the information on a group basis. We do run individual sessions. Those will tend to be for senior people for all the reasons you would imagine. Their affairs tend to be a bit more complicated. And we get questions like, well, I was thinking of increasing my pension contributions. How does this tie in with it? And extends to things like, well, what about life cover? What about other pensions, etc.? But so we can do individual sessions. In the end, the employee needs to agree if there's a change to contracts of employment. In the one we're doing at the moment, and we'll tend to do this, we'll have a sort of run-on technical helpline. So once the implementation it comes in, then for 2 or 3 months after that, we'll tend to have a helpline available because people might well have questions. To be honest, after 2 or 3 months, everyone's sort of used to it and the questions might well stop. But we sort of effectively run an indefinite helpline, but it tends to be formally for 2 or 3 months after implementation. It's very important to review both the salary sacrifice arrangement and the workplace pension scheme itself. Things change. And Stephen's already touched on this, that we know that Labour have reviewed salary sacrifice, and there may well be something in the autumn statement. When government says they're reviewing something, it doesn't always translate into action, particularly under the Conservatives, who seem to review absolutely everything. There's 3 ways it can go. They can not change it at all. They can completely stop the benefits of it. Or one of the things they could do is cap the amount you can sacrifice. That's been mooted. Another aspect to that is that sometimes when things have changed, the existing arrangements have been okay. It just affects new ones. So if anyone is actually looking at a salary sacrifice arrangement, it makes sense to have a look at it now and see whether it's worth setting one up in the first place. And if any changes come in, then they come in. And I'm sure very clever people like Stephen will find ways of doing it in a slightly different way. So if you can have the next slide, please. So here's our employer. Pensions are complicated, salary sacrifice, money flying out the window, etc. The aim of this is not only to help with salary sacrifice, but to help with the pension scheme and indeed any other ancillary benefits, to take the burden off the employer. And as you can see from the next slide, one of those objectives is to keep a bit more money in the jam jar and stop some of it flying out the window. To be honest, you can't mitigate the increase in costs of national insurance and national minimum wage by salary sacrifice, but it can go a long way to mitigating some of that increase. So next slide, what do we get? Employers happy, pensions are sorted, saving a bit of money, and you can get on with your day job running the business. So if you go down a couple of slides, please. So questions, then last slide, please. Important notes. Again, thank you for listening. If you need any information, you can message me. If you want the spreadsheet template, I can send it to you and you can put the information in yourself. My details are on this presentation and Stephen's got them. So thanks very much, and I'll pass back to Stephen.
Great, thank you very much indeed, Phil. That's great. Has anyone got any questions? Or if anybody wants a copy of the slides, feel free to just drop me an email and we're able to sort that out for you. don't think we've got any questions. We've got nothing in the chat box. This will be the last webinar before we have a summer break. We will be starting again in September, so watch out for those webinars coming through. Don't forget to join us at the Holland Hall Hotel and on next week for our business club lunch, along with North Cheshire Chamber and Orbit Developments. I know, Phil, you've been to a few of these, and I think you've agreed they're a great event.
Yeah.
We've got the Managing Director of Manchester Airport coming, so well worth a listen to him. But thank you very much indeed for joining us this morning, and have a great day.
Thank you.